Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for August 21st, 2023. We've got some exciting things to go over in the market this week. We're going to talk about some general economic data, inflation rates, interest rates. We're going to talk about where we are in the market in general, the S&P 500, where we are year to date, and what we did last week and what it looks like going forward. And then we're going to go through all the trades on the option trading platform, touching on what we've got on, the adjustments we're making, as well as new trades that we're looking at for this coming week. I promise we're going to dig into some option trading details, tips, and tricks. So I really appreciate it if you hit that like button right now and subscribe so you're notified of future videos and we can learn together. Also, please make sure that you download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. Disclaimer, I'm not a financial planner. Please do your own research, and if you're new or learning options, I do recommend you start small. All right, so hey, we started the week with the S&P up around the 4460 level. This is SPX on TradingView, and we ended the week down here at 4369. So we were down about 2% for the week. We're still up overall year to date. This is the year to date chart, about 13% this year from where we started the year at. We started at 3824. Here's a long-term chart that I like to keep track of. Since 2009, I've kind of made a trend line, and we are still above that trend line. You know, that's the 13% that we're up this year so far. And I've put some resistance, some support and resistance levels, further resistance. But, you know, I think we're going to continue along this trend line. I think for the next couple of months, things may be choppy. We may trade within a range. But until the end of the year, I think we're going to be trading in that range. With being up where we are right now, I'm still, you know, less than 50% invested in my options trading account. Again, I let my retirement accounts go on their own, but in this options trading account that I'm looking to grow at a faster rate and actively manage, I'm only, you know, a little bit less than 50% invested right now. The global economy right now is hurting a little bit. China is in a deflationary period. Could be, you know, could have some trouble with several issues, you know, which come from communism that can affect the rest of the world. It seems like the inflation numbers, you know, I think inflation's solved. Earnings from Target and Walmart came out and they were in line. No supply chain issues, or, you know, they're greatly relieved, and raised wages have curtailed as well. So it still may be a while until the rate cut next year. If we look at the CME Fed Watch tool, it's not the next cut. They moved out to May, so it's getting further and further away. It may even continue to move out, you know, with the way that Jerome Powell is talking. He wants to keep inflation in line, so he may hesitate to cut rates for quite a while. I think what that's going to do long term, I think it's going to stop the markets from moving up. And again, this is just my opinion. You guys, I'm sharing it with you. You guys let me know in the comments below your thoughts. Let me know what you're thinking. But I'm thinking trading in a range. I don't think it can drop too much further because he does have the ability to drop if needed rates. But I don't think he will until, you know, middle to even, you know, election time next year. But typically the markets don't really react, or they react in advance of that and start moving up. And I think we'll enter a bull market 9 months, you know, 6 to 9 months before he starts cutting rates. That's when the market, I believe, will take it into account. But again, we're still a long ways off. So I think until the end of the year, we're going to be traded in that range. Let's see what else. As far as the sectors, last week, here's the 5-day chart on sectorspiders.com. This is a free resource. You can check this out. But everything was down last week. You can see. So everything got hurt. And, you know, year to date, this is the 13%, you know, that we're up. But communications, discretionary, and technology have all done well. And you can click on these and you can see the top holdings. Meta has done well, Google, Netflix, uh, those types of accounts or companies. And then the consumer discretionary, Royal Caribbean came out with some numbers, and they're doing really well. Amazon's doing well. And then down here with technology, um, of course, Nvidia, AMD, Palo Alto Networks. So all stocks that we like to trade. Um, as far as being, I'm still long energy, but we did have a run up. We're in the $80 range now. So um, let's see. I think we jump right into our trades right now. So let's do that on the Tastytrade platform, and we'll start with corn. Again, I took my oil. Uh, let's look at oil real quick. But /CL, we've done really well in oil, but you can see, my chart's not popping up on oil. Waiting for data. Uh-oh. We'll come back to that. Let's look at corn. All right, here's the corn chart. But you can see corn is way down. This is over the last year. So it's at a low. I don't think they're giving corn out for free. So I'm long corn. I think at some point it's going to come up. I did close out my corn spreads that we had. I'm doing put credit spreads, but I rolled to the next option trading month, and you can see it moved up just recently after I rolled last week. And we're 33 days out, 492. I've got the 460, 470 put credit spread on. So if we go to the curve mode, we can see where the stock's trading today. We're profitable above that 470 short strike, even down a little bit below that. AMD is another one that we've got on that's done pretty well for us. We look at the option chain. Yeah, in the last 30 days, we made about $156. Right now, we've got on, we had they're iron condors, but this looks like 2 tranches of them. But I actually pushed down the 115, 120. So we've done a little bit of trading in here. We're up a little bit. You can see we're right in the middle of the profit range there. So we're looking good on AMD. There is earnings already came out. So I like to, on the left, look over here, and you can see when the earnings are coming out when you search by positions. You can also look by the market and see what the market, I use this every day when the market opens, and I see where oil's trading at. And this is what a lot of the professional traders look at, is the futures options. ES is the S&P 500. NQ is the Qs, the technology, the NASDAQ. And then you've got bonds, gold, nat gas. RTY is the Russell. So that's something that I like to look at. And then I use that a lot. And then the positions. And positions I just sort by alphabetically, and then you can see the earnings, the IBR, and where it's trading. So AMD is looking good. We're standing pat. We're 26 days out. Good range. We're right in the middle. Amazon. Let's take a look at that. As far as where Amazon is on the chart, they're kind of in the upper range, but they had a bit of a drop, over the last week or so. So we're the 135. Yeah, we did drop. So I rolled down that call. If we look at the, where we are over the last year with Amazon, I think we're up a little. Yeah, $230. So we put on some iron condors. I always use spreads because it's a pretty high price stock. So I'll do iron condors, and if it gets too high or it gets to the top end of the range, then I'll do call credit spreads, looking for the stock to come back down. And if it gets too low, then I'll do put credit spreads. But Amazon has done pretty well for us, and we're at 135. So if we look at that range, yeah, we've got a tight range there that we're profitable in, but we're actually within that range. But that's why I rolled down that call credit spread, and we're 26 days out. So We'll see if it comes back, and then if IVR rises, then we'll place another trade in the next monthly option cycle. But right now, IVR is too low to do that. I like to see it above 20. The bank stocks, I'm not going to talk about these, but they're, I've got long leaps in these, and they're going to come back at some point, but it may not be until the end of the year that they really start to come back. So I got to look at maybe closing these out, using that cash somewhere else, and then because again, I think until those rate cuts come, that's when the bank stocks, I believe, are going to take off. SoFi, I'm definitely going to keep. Actually, I like Bank of America, Citi. I like all of these, and Wells Fargo's done well for us. So, DraftKings, let's see where we are there. Actually, you know what? Let's go back to Citi. Yeah, from Citi over the last 180 days we've made money. Yearly so we're starting to make some of it back. $447 over the last 180 days. But again, we're long. But yeah, let's move on to DraftKings. So we've got a 28 puts and calls on, as well as leaps. So I did sell the calls because it moved down. If we look at the chart, it did move down quite a bit in the last couple of weeks. Still long DraftKings. Love the stock. Disney partnered with Penn for the ESPN Bet. That's the new competition and why it seemed to have dropped. But we've done well, over the last year trading in this thing. I think we've made over $600 in the last 365 days. So we've done pretty well. If we look at the chart, I put on those calls in order to bring our profit zone down, but it dropped down to 26. But look, at expiration, we're still profitable with what we've got on, and we're up 243 in these trades now. So we'll stay long. Love DraftKings going forward. End phase. We can look at the chart. It had a big drop. It's been continuing down, but I like it long term. They're in the solar EV. So I rolled down the calls, the 135s, and let's see where we're at. Yeah, so that brought our profit zone down, and even at 130, we're still in that profit range. So I think we're going to be okay. IVR dropped. It's quite low right now, but we'll see how this goes. As time marches on. We've got $364 to make in it with the rolls that we made. We collected extra premium. So I suspect we're going to be okay in there. Google, we've got a 130, 125 put spread on. It did drop, like everything else a little, but I'm definitely long Google. It is at highs, so you could trade both sides, especially in this market since I think it's choppy. But I'm leaving my put spread on for now. It moved, it moved down $2.46. It looks like on Friday. So long Google, it's a behemoth and going to do well going forward. IWM, we've got a put spread on there as well, 193, 188. So you can see the profit zone. We're below that at 184 right now. So we need a move up in the Russell, and we've had a big move down. So I'm going to stay long. Probably won't throw a call spread on there just because we've got call spreads on in Qs. So I'm long Russell, short technology because the Qs are up more than IWM right now. But I like that position. MPW, they've gotten hurt. We've talked about this one last time. They dropped even further to 6.92. IVR is really high, but they pay like an 11% dividend. So I'm just kind of holding that long term and the actual stock, 400 shares, because we get that 11% dividend paid quarterly. So I'm confident that's going to do fine long term. It's just got, it's probably going to be the end of the year until that starts coming back, but we collect the dividend in the meantime. Nvidia is another trade. We did an iron condor. They've got earnings this Wednesday after the close, And I'm actually working on a earnings trade video right now using similar iron condor, and I'll keep an eye out for that video. That's gonna be coming out probably maybe tomorrow, maybe the next day, but it'll be before the earnings on Wednesday, and it's a chance to make a quick $350. And so keep an eye out for that one. Palantir, I'm like Palantir a lot. They had a big drop down to 14. Palantir does trade within that range. I think, there's support right here at 14 and, resistance at 20. But, I talked about this before. I thought they were trading between 15 and 19. Looks like it expanded a little, went up to 20 and down to 14. I don't think it's going to go much lower. No telling, but that's why I put on the calls in order to bring down my break even here to just below 16. We just need it to move up a little, and I'm confident it will. If not, as we get closer to expiration, then we'll close out and roll out, put on some new trades. And when it's that low, I'll just go long. So I'll sell some puts and maybe buy another Leaps. We've got a Leaps on there right now, but love Palantir. PayPal, like everything's gotten hit. We've got the 65.60 put spread. Going back to Palantir, if we look just over the last 30 days, I think we've done pretty well. Just, $867 just in the last 30 days trading Palantir. So it has done really well for us. PayPal, let's see where PayPal's down, but great stock. I'm long PayPal. Yep, only the put spreads. I'm going to leave that. I'll roll, as we get closer to expiration if it doesn't come back. But I like PayPal long term. Good company, good fundamentals, and it will come back. Qs we talked about, closed out some trades there. That's my hedge. Along with sometimes I do the SPX and sell a call spread. I'll probably do that next week. Going back to that long-term SPX chart, the S&P 500, I do believe that we're still going to be choppy and we're a little bit above the trend line. So I suspect we're going to move a little bit low over the next month. So I'm definitely going to try to even out my deltas and trade both sides and throw in some SPX calls in addition to staying short the Qs with call spreads. SOXL, one of the comments, and appreciate it from any comments, any stock trades that or option trades that you guys are looking at, please let me know. But we got a great recommendation on this one. I didn't even know it existed, and I put that trade on. We're down a little bit, but I think semiconductors are going to do well long term, and we're still in that profit range, and we've got the put spread on. TDOC, we've got a Leaps option on, and TDOC is at the bottom of the range, but man, look at all that support. I do not think it's going to go much lower, just to, with all that support over the last year. It's hit this range many times and it's always moved up. So definitely going to stay long TDOC when it's at these levels. And we've done pretty well, I think, over the last year. We've made over $900, $939 trading TDOC, and it's mainly Leaps and being long because I like the stock. And then when it does move up to the upper end of the range, then I'll put on the other side and wait for it to come back down. So sell calls against it, against the Leaps. So that's kind of the way that we play TDOC. It's down to 23 from 24 last week, and IVR is still really low. I can't wait for a higher IVR environment, because then we're going to make collect more in options premium, since I primarily like to sell options as opposed to buy them, because your probability of success is so much higher. Tesla's been hurting. It's moved down a lot. I'm kind of stuck. I don't want to roll my call spread. I've got an iron condor on where we rolled that down. But because of this big move down, we're still up for the year, $324, but we got hurt on this big move down in Tesla, but that's okay. It will come back, and I'm going to leave this on, see if it comes back to that 255 range up here. We're down here. probably won't. So at some point, rather than take the entire loss, so you see these are $10 wide. If I were to close this out right now, close, it's $9.55, so it's almost $10 to close it. I can just leave it on and see if it comes back. I'm only gaining $45 here by closing it out. But hey, 45 is 45. But you know, there's a good chance Tesla moves a lot, so it could come back. So I'm gonna wait. We've got 26 days to expiration, so we still got some time. And then the last one that we've got on is WFC, Wells Fargo. It's done pretty well for us. I think, let's see, yeah, 180 bucks over the last year. But you know, I'm long Wells Fargo, and I like the stock going forward. So I'm gonna stay long. It's kind of in the middle of the range over the last year, but banks are way down right now. So it's probably going to be the end of the year until that comes back. UPS is one that we closed out. I don't have the trade on right now, but I had kind of an earnings trade on. If you look, you know, we made a couple $100 in the last year. I don't trade it that much, but there was an earnings, and so we made 127. We put on an iron condor, the 170, 175, and the 200, 205. And then the stock moved a little, and I rolled down the call spread from the 200 to the 190, 195. And then we closed it out. But this trade was one that was put on in high IVR. And then it even dropped down and tested our short put, but we were still able to close it out because we put it on in high IVR, so collected a lot of premium, and we still made 127 bucks. We closed it out for, it cost us $1.07, but we collected 157 and 77. So that's kind of how the earnings trades look. And again, please keep an eye out in the next couple of days for the oh, actually, you know what? I closed out some the XOM, the Exxon as well. I want to cover that. Oil's up. I was long Exxon. So I love Exxon and Chevron, CVX, but you can see over the last 30 days we made 258, but we just closed this out. And Chevron as well. Close that one out. But you know, I'm gonna, any down move in oil, I'm gonna be looking to put on Exxon and Chevron. All right, so yeah, I'm gonna keep my list of stocks ready to go. Keep an eye out for the Nvidia earnings iron condor in the next day, and I'll get that video out, and you can see how to possibly make a quick 350 bucks. I'm going to look to sell the 0DTE SPX call credit spread. I think it's going to be choppy, but let's hang in there. Appreciate you joining and watching. Be sure and like the video, subscribe if you haven't already, and look forward to seeing you in the next one. I appreciate you watching. Have a great week.